Are cryptocurrencies really safe? What dangers lurk in the crypto world? These are the questions that baffle many, from seasoned traders to curious newcomers. Cryptocurrencies, an innovative and exciting frontier in the financial world, aren't without their share of risks. The decentralized nature that makes them so appealing can also make them a playground for unscrupulous individuals. From fraudulent activities such as fake initial coin offerings and Ponzi schemes, to the creation of counterfeit tokens that mimic popular cryptocurrencies, the risks are real and varied. Phishing attacks are also a common threat, with malicious actors creating deceptive websites or emails to trick users into revealing sensitive information. And let's not forget the fake exchanges designed to part you from your hard-earned assets. But don't let this deter you. With the right knowledge and precautions, you can navigate these waters safely. Let's delve deeper into these risks and how you can protect yourself. First on our list of risks, scams and fraud. But how do they occur in the crypto world? Well, let's dig in. One common form of scam in the crypto space is the fake initial coin offering, or ICO. This is where fraudsters create a bogus project or cryptocurrency, complete with a slick website and a tempting sales pitch. They'll often promise high returns to lure investors in, but once they've collected enough money, they disappear, leaving investors high and dry. Another type of scam to watch out for is the classic Ponzi scheme, albeit with a crypto twist. In these schemes, scammers promise investors high returns on their investment. However, these returns are not generated through legitimate business activities. Instead, they're paid out from the funds contributed by new investors. Eventually, when the flow of new investors dries up, the scheme collapses, and those left holding the bag lose their investment. Then, there are the fake tokens. Here, scammers create tokens that closely resemble popular, well-established cryptocurrencies, tricking investors into buying what they think is a legitimate asset. These tokens, however, are worthless, and the scammers walk away with the investors' real cryptocurrencies. It's important to note that these scams are often sophisticated and can be hard to spot. Scammers go to great lengths to appear legitimate, using technical jargon, impressive-looking documents, and even fake testimonials. So, how can you protect yourself? Well, the best advice is to do your own research. Don't rely solely on the information provided by the project or person selling the token. Look for independent reviews and analysis. Check if the project is listed on reputable crypto exchanges. And most importantly, be skeptical of promises of high returns with little to no risk. Remember, if it sounds too good to be true, it probably is. In the world of crypto, as in life, there are no sure things. So be cautious, be skeptical, and always do your due diligence. Scene script. Next up, counterfeit tokens. They're not just a problem for physical money. Imagine this. You've stumbled upon a digital token, a non-fungible token, or NFT, that piques your interest. It's linked to a digital artwork that you absolutely adore. You're ready to make a purchase, but hold your horses. How can you be sure that the token you're buying is genuine and not a counterfeit? Just as with physical money, counterfeit tokens are a real issue in the crypto space. These are tokens that are created to mimic and impersonate legitimate ones, particularly in the realm of NFTs. They claim to represent ownership of a certain digital or physical asset, but in reality they're nothing more than a sham. For instance, a scammer might create a counterfeit token that claims to be linked to a popular digital artwork or a sought-after collectible. They might even use the same name, imagery, and description as the legitimate token. However, when you buy this token, you're not actually gaining ownership of the asset it supposedly represents. Instead, you've fallen prey to a scam. So, how can you avoid this pitfall? The key is to verify the authenticity of NFTs before making a purchase. There are several ways to do this. First, you can check the provenance or the history of ownership of the NFT. This can usually be found on the blockchain and can help you verify that the token is genuine. Second, you can check the token's contract address. This is a unique identifier that is associated with each token. By comparing the contract address of the token you're considering with the contract address of a known, genuine token, you can determine whether the token you're looking at is authentic. Finally, use reputable platforms and marketplaces for your transactions. These platforms often have security measures in place to prevent the listing of counterfeit tokens. In conclusion, counterfeit tokens can pose a significant risk in the crypto space. But with due diligence, you can protect yourself and your digital assets. Always verify before you buy. Your digital assets are at stake. Phishing attacks, a common cyber threat, are also prevalent in the crypto space. Just like in any other online industry, these attacks aim to trick the unsuspecting user into handing over sensitive information, be it your private keys or login credentials. Let's delve deeper into how these work. Picture this. You receive an email from what appears to be your go-to crypto exchange. The email states there's been suspicious activity on your account and urges you to click on a link to resolve the issue. This is where the trap lies. The link directs you to a fake website that mirrors the real one. As you enter your login details to access your account, you're actually handing them over to the attacker. Another common phishing method involves the use of social engineering. The attacker might pose as a customer service representative from a well-known blockchain project or exchange, asking for your private keys or other sensitive information. Remember, no legitimate entity will ever ask for your private keys. So, how do you avoid falling into these traps? First, always be skeptical of unsolicited communication. If an email or message seems suspicious, it probably is. Don't click on any links or download any attachments from an email you weren't expecting. Second, double-check the website's URL you're visiting. Phishing sites often use URLs that closely resemble the legitimate site but have minor spelling differences or extra characters. If the URL looks suspicious, don't enter your details. Third, enable two-factor authentication on your accounts. This adds an extra layer of security, making it harder for attackers to gain access, even if they manage to get your login credentials. Lastly, keep your private keys private. They are the keys to your crypto kingdom and should never be shared with anyone. Always double-check the sources of your emails and the websites you visit. Your private keys and login credentials are precious. Scene script. Last but not least, fake exchanges. They look real, but they're not. In the vast ocean of the crypto world, one of the most cunning predators is the fake exchange. Just how a chameleon changes its colors to blend into its surroundings, these fraudulent platforms camouflage themselves to appear like legitimate, reputable exchanges. But beneath the surface, they're just a trap set to steal your precious crypto assets. So how do these scammers pull off such a convincing act? Well, they invest time and resources to create a platform that mimics the user interface of a reputable exchange. They may have all the bells and whistles, an impressive list of supported cryptocurrencies, competitive trading fees, and even a responsive customer support chatbot. But remember, all that glitters is not gold. Now you might be thinking, how do these fake exchanges operate? The answer is simple, yet sinister. Once a user deposits their cryptocurrency into the exchange, the scammers behind the platform gain control of those funds. They might let the user trade for a while, making the platform seem functional, but sooner or later, they'll pull the rug, disappearing with the user's assets and leaving them high and dry. Identifying these fake exchanges can be challenging, but there are some red flags to watch out for. First, do your homework. Research and verify the exchange's background. Is it registered? Does it have a physical address? Second, be skeptical of exchanges offering deals that seem too good to be true. Unrealistically, high returns are often a bait to lure in unsuspecting victims. Lastly, check the security features. Legitimate exchanges prioritize user security and will have measures like two-factor authentication in place. Remember, in the crypto world, caution is your best defense. Don't be the fish that gets caught by the shiny lure. Be the savvy investor who knows when something doesn't seem quite right. Always use reputable platforms. Your crypto assets are valuable. So are cryptocurrencies safe? They can be if you're careful. Now let's quickly recap what we've covered. The crypto space, while exciting and full of potential, is not without its risks. From scams and fraud to counterfeit tokens, phishing attacks, and fake exchanges, The threats are real and varied, but don't let this deter you. Being aware of these hazards is the first step towards safeguarding your investments. Always conduct thorough research before diving into a new project or purchasing tokens. Make sure to verify the legitimacy of projects and platforms. Be skeptical of unsolicited communication and offers that seem too good to be true. Keep your private keys secure, enable two-factor authentication, and stay updated on the latest security practices. Remember, the most effective shield against these threats is knowledge. With caution, vigilance, and a commitment to learning, you can navigate the crypto space safely and profitably. Stay cautious, stay informed, and keep your crypto assets safe.